Hi, today I wanted to talk to you about the conventional financing and appraisal addendum. That's the most frequently used addendum here in the Northern Virginia market. And keep in mind, when we're talking about contracts, it is always important to talk about the area where you are, because contracts are both state and in some cases region specific. Today I am addressing the Northern Virginia version of the conventional financing and appraisal contingency. Basically, when you go to buy a house, most of us find that we need to finance. And with this financing contingency, there are two ways that you can go about it. You can have a financing contingency with an automatic extension, in which in most cases that'll take you through to closing. Now, where that benefits you as a buyer, meaning you never have to remove your financing contingency, it can make sellers a little nervous, as you can imagine. They're not really sure if your financing is going to come through. The trick with this one is that if the seller decides to call the buyer on it and gives them a request to remove the financing contingency, the buyer is given an out on the contract. So most sellers are not super comfortable doing that. So what we've been seeing is that most financing contingencies continue on until close. Well, sellers weren't real happy about that. So we've recently had something new added into our contract, and it is the financing contingency with the automatic expiration. Now, when I say new, this actually harkens back to how our contracts used to be, which is you would have a financing contingency with a specific date. That date comes and goes. If the financing contingency is not removed, the financing contingency is over. So basically, it would put pressure on the buyer to make sure their finances were in order. And if they weren't going to be able to get that financing, they would want to get that contingency, they would want to void the contract before that contingency expired. So as a seller now, you have a choice when you receive a contract from a buyer, which type of contingency that you want the buyer to take. And as a buyer, you have the choice of which kind you want to offer. Those are both negotiable. Just because a contract comes in one way or another doesn't mean that it can't be changed if both parties agree. So that's just something to work very closely with your agent on, because there are definitely pros and cons to each approach. The appraisal contingency is separate and still dependent on the financing contingency, or conversely, the financing contingency is dependent on the appraisal contingency. There is a push by a lot of banks now to remove actual appraisals if they can do what they call a desk appraisal and determine that the value of the house is close enough to sales contract. Sometimes you won't even need an appraisal. I've come up against that recently on some of my contracts. So it makes it easier for everybody. It saves the buyer some money. They don't have to pay for that appraisal. And so all parties are happy with the outcome. The financing and appraisal contingencies are really, really important to both parties in the contract. So this is not intended to be an all-encompassing explanation of how that works. You really need to work closely with your agent to understand how what you put in that contract affects your ability to close on that property and what you could be liable for if you don't. If you have any questions, I am always available to answer them and would love to work with anybody who is interested in buying or selling a property in Northern Virginia. Thanks.